Good morning, everybody. Hey, welcome to Thursday, February 26th. I hope that your week is going well as we kind of wind down today and tomorrow, and then, hey, the weekend's here. Hey, again, I want to thank you for joining us today. I hope that as you look at the marketplace, we had three really good days today. It's going to go up just a tad, I think, this morning as we get ready to start. At least that's what the numbers are looking like right now as we get ready to start the day. But remember, we've seen a lot of up days. We saw a drastic down day on Friday. And so you never know what's going to cause the next downturn, the next 10% correction, or the bear market. So, folks, that's why it's vitally important that you know how much risk you have in your portfolio. And the only way to do that is with our financial x-ray review. Call us right now at 863-382-0037 to schedule your no obligation financial review. Hey, have a great one. Dave will be with us in just a moment.
Honey, I'm good. Boy, am I. It's 8:41. I don't know that for sure, but I keep getting cold and my head gets swelled up. What can I say? Time for check in on your money and see how Wall Street's treating you today. Boy, we're buying like chiclets in Wall Street lately. Up again yesterday. Let's double check and see what's going on today. Downtown Sebring, we go to the offices of Statler Financial Services. Phillip Statler is standing by. Phillip, good morning. My Lord, was it another day like crazy yesterday, huh?
It was, Dave. It was a great day yesterday. Everything was just rosy when it comes to the market. I mean, everything except for the NASDAQ was over 1% gain yesterday. So great day on Wall Street yesterday.
Yeah, and the NASDAQ had a new intraday record in the bunch, too. So we're sitting there saying, virus, what virus? Let's just buy junk, I guess, huh?
Well, I guess. I mean, I'm not sure what's really driving this thing. Earnings are, I guess, overall, earnings have been good. But here's what gets me when we look at earnings, Dave, is their comparison to what analysts had expected, and they don't really drive home the fact that how much they are compared to last year. And so a lot of the numbers I'm seeing, if you compare it to last year, they're not as good, but yet the stock price is higher.
I've noticed about the same thing. I know you drill a lot deeper than I do, but I'm seeing, perfectly decent earnings reports, but then I compare it to last year, and we're looking flat and sometimes off from the prior year, and I'm saying, okay, fine, they're smart guys, they're managing their company well, but this says the market ought to be, going up at that 2, 3, 4, 5% a year range, not bumping its nose on the ceiling every day.
Exactly. And so, I'm starting to think of that term of the late 90s. This thing's just going crazy again, and I can't really see why.
Yeah, the words of Alan Greenspan are ringing loud here. Irrational exuberance, right?
Exactly.
Yeah, so.
Though maybe one thing could be helping us a little bit, Dave. I did see that China has reduced the tariffs by 50%. So where we had a 10% tariff, it's now 5%. Where we had a 5% tariff, it's now 2.5%. So from an export standpoint, that could be helping us.
Absolutely. And as we settle the trade war, I mean, it ended up being a basic standoff, but as we settle the trade war down, international trade will get just a little bit more routine, and some of the stocks that were being held back by concerns on tariffs will start going up, and the bull market continues. And like we said, sometimes to an irrational level, right?
Yeah, exactly right.
Boy, we sound just cynical as all get out today. And I mean, it's good for our money. Don't get us wrong. But when you can't figure out why, it becomes a head scratcher. Macro junk out this morning. I was looking and you found it. We had a pleasant surprise on first-time jobless claims. So good indication on the employment front, I gather.
Yeah, it did. We had first-time claims come in at 202,000. Which was a little bit less than was expected. The expectation that I saw was 215,000. So that was definitely a surprise there. That less first-time claims this last week.
Understood. And I've always said when you start getting down into those levels, as long as it isn't a monster bump up, I kind of look at them and say, well, we're talking about statistical wobble. This is so abnormally low. 202 versus 210. I just kind of say, okay, fine. Good news, the employment front continues.
Yeah, and I was reading an article last night that said basically, as low as our unemployment rate is now, that it's going to be hard for it to get any lower, given that there's not any jobs really out there for people. That if you want a job, it's there for you.
Absolutely. The other macro figure that came out is they reported productivity for the fourth quarter. And this is one of the interesting things. Fourth quarter productivity growth wasn't what the investors wanted to see, but overall, 2019 in general, productivity growth during the year 2019 was the fastest we'd had in 9 years, which is undisputably good news. Fourth quarter was a bit of a disappointment, though.
Yeah, it was. I mean, the number came in at 1.4%, and they expected 1.6%, which would have even made the whole year better than what it ended up. But it obviously is not. It doesn't seem to be affecting the markets. Actually, it is affecting the markets. They've ticked up substantially.
I suspect it's probably the 2019 full year figures that they're responding to then. Boatload of reports came out. One of the ones that I got that you didn't have the specifics on, the New York Times had a beat, and I just wanted to say they need to send a thank you card to President Trump for that one, don't you think?
Yeah, he's. I'm sure he's increased their readership and radio and news listenership too.
Oh, yeah. A newspaper company with growth these days is something that's almost a red letter day, and the New York Times has had a pretty well publicized war with the president. So, like I said, they need to send him a dozen roses. Bunch of household names reported, though, as well, that you do have the numbers for it. It's kind of an interesting mixture, isn't it?
Yeah, it is. We've got things like Twitter, social media giant. They came in at 25 cents a share, which was 4 cents below what was expected. Now,
Huh?
revenue did come in above the forecast. Now, here's, I think, the key for them. They were able to monetize daily activity jump by 21% from a year ago. And I got to think, based on the stock price this morning, that's got to be what they're looking at because the EPS missed. So they're trading up today a little over 8%.
Yeah, when you said there was a miss, and I'm looking at an 8.5% growth rate pre-market, there had to be a macro that they're looking at that we weren't noticing right off the bat.
Yeah, and so I'm thinking it's that 21% growth in monetizable activity daily use is that they're seeing that as going forward. There's more people that we can advertise to.
All right. Well, that's something new
Um,
for us to watch when we're looking at the other internet sites, right?
exactly. Then we had a
Gotcha.
couple health companies come out. Cigna, they came out. They beat by 11 cents a share. Revenue was also top what was forecasted. They've seen a big growth in their pharmacy benefit unit. They're trading up today a little over 3%. The
Cool.
other healthcare company we had was Cardinal Health, and Cardinal Health beat by 30 cents a share. Revenue was also above estimates, and they raised their full year forecast. Again, commenting about the strength across their pharmaceutical segment. Seems to be a theme here. They're trading up almost 7% this morning.
I was going to say, they're the healthcare concern that's on my big winners list this morning, so I knew something big had happened there.
Yeah. So let's go to restaurants, food items. We've got Dunkin' Brands came in fourth quarter. They came in 3 cents above estimates. Revenue was again a little bit below the forecast. And so as they look ahead, they did announce a 7% dividend increase, which I'm sure is well appreciated. And they're up a little less than 1% this morning.
Sounds like they needed the dividend increase in order to stay on the positive
Yeah,
side, didn't it?
that's probably true. Now let's look at a negative one here. We have
Yeah.
Yum Brands.
Uh-oh.
They're the parent company of Kentucky Fried Chicken, Taco Bell, Pizza Hut. Well, they didn't have a real good quarter. They missed by 13 cents a share. The revenue did come in above forecast, but their same store sales were slightly short of what they had expected. A big deal was Pizza Hut did not live up to the performance that was expected from them.
I was going to ask what it was that caused that because, I mean, they're household names and given disposable income, I expected that to be a positive.
Yeah, it's Pizza Hut. I guess, more competition in the pizza business. And so they're trading down a little over 3.5% this morning.
That's an ouch.
Yeah, it really is. You know, that you didn't expect that out of them. We have a couple others, if we have time, that
Yeah, let's do a
are
couple.
kind of recent, stocks. Grubhub, they lost.
Hi,
Huh? You ready for Grubhub to come deliver you some grub?
I'm ready anytime.
So they lost 5 cents a share in this last quarter, and that was a penny more than what the analysts had expected. Revenue, though, again, was above what was forecasted, and so they're having to spend a little extra money to recruit staff. And they're basically, well, no, just changed. Sorry, just updated. It's down 1.5% this morning.
Okay, in order to help the economy, what we need to do is call Grubhub and tell them to deliver us some Taco Bell.
There you go. That'll help everybody, right?
Help the economy, people. Buy fast food and order it through Grubhub.
And then
Gotcha.
another recent stock that came on board was Peloton, the little stationary bicycle that you have a subscription for, and you exercise to death on it.
Oh, yeah.
Yeah, they lost 20 cents a share, which was way better than expected. They were expected to lose like 36 cents a share. Revenue, again, beat forecast, but the company did give a little smaller than expected current quarter sales outlook. And so that wasn't what they were really looking for there. Let's see. I thought I had stock
Must be
price.
the Peloton wife from that TV ad. I got him so much crud. Must have left her Peloton husband, right?
Yeah, maybe so. But they're down 7.3% this morning.
Ouch.
Yeah.
Setting the table again for the morning hours here. Yesterday was a decided up day. Dow was up by over 1% and 2/3. Nasdaq was up by about 0.5%, but that was still 40 points at a new intraday record. And the Standard & Poor's 1.13% up, and that I think is a new closing record. So we're in nosebleed territory without a doubt. Phillip, 45 minutes before we open this morning. More nosebleeds today?
Well, we are. We're heading up, but it has been a little bit of a roller coaster. I mean, everything's been green, but the Dow's been anywhere from up 40 to up 120. Now we're at 90, so we're up 90 points right now. The S&P 500 is up $9, and the Nasdaq's up a little over 27. And so all green, and I expect that unless something crazy happens, that that's where we should open this morning. Gold and silver are both trading higher today. Silver's up 1.5%, gold's up about 0.5%, and then crude oil is basically flat. I mean, it's a little bit red. It's down less than 0.2%, but it's at $50.66 a barrel right now, Dave.
And that's good to hear. Overseas markets, by and large, the tariff news out of China helped the Asian rim incredibly. All the indexes I'm seeing were up over 2% this morning. European markets also generally up midway through their trading day. Phillip, we're sounding almost cynical because things are almost too good to be true. Stability still counts even during up times on the market. How do I find you to get advice to make sure I know what my retirement account is going to be like in a few years?
Yeah, you're right, Dave. You know, folks that are in that, what we call the danger zone, 10 years before retirement, 10 years after retirement, need to make sure they know how much risk exactly is in their portfolio. And to do that, we've created our financial x-ray review. To get yours, schedule an appointment, 863-382-0037. Catch us online at statlerfinancial.com, and then join us every weekend, Dave, for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
And back here again tomorrow morning with an up-to-the-minute snapshot on Light FM. Phillip, thank you so much, and we'll catch you tomorrow.
All right, buddy. You have a great day.
Thank you much. It's 105.7 Light FM and Statler Financial Services. Phillip Statler. Remember that.
Hey, folks, I want to thank you for joining us today. I hope your day is off to a great start. I look forward to speaking to you again tomorrow, and then have a great weekend. We will talk to you tomorrow. Have a great day. Bye now.